Hello again, thanks for joining me. I'm taking the opportunity to do the US futures weekly chart analysis live again. The first chart is the US dollar index, as it is always. It plays such an important part in so many of the other instruments in the market. You need to look at this one first to understand what's really going on. Now, this is the most dominant bar at the moment, and the lows of this bar are important. If you remember, over the last couple of weeks, we identified that there was some weakness came in here, some selling pressure came in here. It's perhaps only really softness at the moment, but a break of this bar's low would probably call it weakness. So if you got something like this, it would be weakness coming in. This week's bar moved higher, but on reduced volume. So it was a fairly weak bar. It certainly wasn't strong. It's closed off its high a little bit, but prices maintained itself above this important level here. So we'll give it the benefit of the doubt at the moment. The market is not yet weak, but it's a little soft at the moment. We'll just have to see whether the price can accelerate higher and re-establish the strength that it's previously been showing, or whether price does in fact start to roll over and even break down. The next chart is the S&P 500 E-mini. This is the S&P 500 futures. That's the currently interesting level. There's been some support come in here. Price pushed up to this line, and you've got an absorption bar in response this week. So price has moved higher in response, it's come back down, and it's closed a little off its lows. This is the market absorbing any supply at this important level here, and now we'll see what the response is. Can price accelerate away, or will supply start coming in, overwhelm the buyers and push price back down? So we're at an important juncture here. This is the previous breakdown line, and this is where price either shows how strong it is, or weakness comes in and forces prices back lower again. Next chart is the US Treasury 10-year note. This usually trades the inverse of the previous chart, the E-mini. These are the important levels at the moment. Some buying support came in here. Prices moved up in response. This is the first, it's only really a minor important level, but it's an important level all the same. You'll see here, price was easing itself lower, grinding lower here. A little bit of support came in here, and the next bar was up. Then there was like a little shakeout bar over 2 weeks here. Prices moved up in response. This was a bit of a weak bar, although volume looks high. This was contract rollover, and I think volume was actually a little bit low on that bar, and prices come back just below this line, so it's within the relative safety of this line still. Remembering that there's buying support below the line, but usually you'd expect supply to be waiting above the line. So it's come back down into the relative safety of the shadow of this little line here. And we'll just have to wait and see. Similar to the E-mini, will price now challenge this line and accelerate higher, or will supply come in and it will break down? Next chart is copper futures, copper price futures. There's a gap here. Gap should always be treated like a pivot. You'll see that the high of the gap formed the resistance this week, which is expected, and the high of the gap formed the highs for the week. So that's very logical. That's exactly what you would expect to see. Prices accelerated higher, found the resistance within this zone as you'd expect, where this gap was, and have closed just below it in the relative safety found just below that line. I would expect a test for supply in response next week, a little absorption bar, and then we'll see whether the market is actually strong enough to accelerate higher. Remembering this market will trade the inverse of the US dollar. If the US dollar is going up, this market will be under pressure. If the US dollar is going down, this market will get a tailwind. So I would expect a test for supply next week, unless the US dollar breaks down. If it does, you might find a serious challenge like this. And if the US dollar accelerates higher, that will probably cause a test for supply, and then we'll see just how strong the market is. It's been fairly resilient so far, so we'll just see. This is the gold chart, gold price futures. This is the important level. The price has moved up to this level this week, then it's come back down in a test for supply and closed off its low. That's a nice movement that you would expect to see prior to any serious challenge to a level like this. So this market will also benefit if the US dollar breaks down or moves lower, and this market will be facing headwinds if the US dollar pushes higher. So this is an absorption bar. This is absorbing supply that may be waiting at this level, which would make a breakout easier in the future. And it's also the market marching on the spot, waiting for favourable conditions to trade. So at the moment, with the US dollar went up this week, it made it a little bit more difficult for the market to push higher. So it produces like an absorption bar as it just waits for more favourable trading conditions. This is the important level, pretty much around the 1800. A break below that level would be a change in sentiment. Silver price futures. Silver price futures pretty much did what gold did, but at a much lower level. It's trading weaker overall than the gold market, but it did produce an absorption bar, but at this lower level of resistance. This is where you'd mark a breakdown line. This was a breakdown bar. Prices moved up to the breakdown line, and now it's absorbing supply at this level, just here. So if the US dollar does move lower next week, you may get a challenge to this line. Barring that, you may see some testing for supply while the market just waits to see if more favourable trading conditions will develop. Oh, and also a break below this line would obviously be serious weakness and a change in sentiment. That would be bad. Light crude. Light crude has been really strong. I suggested last week that you may be seeing some bullish absorption forming through here, and that probably looks more like it again this week. These overlapping bars of the previous bar show absorption. You've got some threatening down bars that don't really see any serious downside follow through, and you see a pressing nature to the upside. These are all telltale signs of bullish absorption, and that's generally a really positive sign in a market. This was the important level. Price hasn't accelerated through it, although it has a little bit there, I guess. But it hasn't really accelerated through it. It's grinding its way through it. This is a market that looks like it's going to grind higher over a period of time, and it's quite strong. It's hardly moved lower at all. It accelerated here on the Ukraine issues. Here was the lows of the range. The market consolidated through here and is now grinding its way higher with some real intent. So this market's strong, and it looks as though bullish absorption's really taking over. Now you may find you'll get a down bar at some point. What you won't find, if this is the case, is downside follow through. What you'll see instead is an up bar in response, and this will continue for a period of time until the bullish absorption is broken. and it can go on for a long time. Okay, next chart is the Australian dollar. 70 cents is the important level. The market did find some support come in here, confirmed the following week. There was a little gap down. The market spent a little bit of time dealing with that gap. But price has moved higher, albeit on reducing volumes. So the market's not convinced we're going higher, and the close off the high this week suggests a bit of tentative trading. Price has moved higher, but it's not convincing. It's not showing serious intent. Volumes are reducing and price is floating higher, mostly on the weakness in the US dollar and not necessarily fundamental strength in the Australian dollar. So yes, it's floating higher, but it's not moving with any real intent. And the final market is Bitcoin futures. The important level on this chart is 30,000 at the moment. You'll remember that good buying support came in here. The market found it difficult to break out. Supply came in here. Price rolled over. It's moved down to this important level here, and there should be some decent strength here. A clear break below 30,000 would be a serious sign of weakness, at least in the near term. So you saw buying support come in here on the increase in volume, and since then you've had an absorption bar, another buying bar last week, and an absorption bar this week. You do have a gap here which will need to be negotiated if and when price attempts to break out. A breakout would come moving through that line. You may see price move up to it and then test, and up to it and test before there's any serious challenge to it. I expect price will go sideways and attempt to accumulate for a period. The lows of this bar, if they were broken to the downside, would see a serious down move develop. I expect to see price moving roughly sideways for a period of time while an accumulation continues before there's any serious challenge to this level here, which is about 35.5 approximately. I think it will line up with that, which is the logical level here. Okay, I raced through them as quick as I could. I don't really want it to go too long. Hopefully that was worth watching and informative. Thanks for your time. See you later.